Mortgage rates have flipped once again, hitting recent 1-month highs, and this is right after coming off a time where interest rates were sitting at 3-month lows. So does that mean the rally in interest rates is over, or is it going to continue as we move into 2023? Well, in today's video, I want to spend a little bit of time and actually talk about interest rates, talk about what's happened, why we're seeing this recent rise, what we're likely to see over the next couple of weeks to months, and how that's likely to impact the housing market as we move into the first half of 2023. This past week, the Bank of Japan made a surprise decision to let their benchmark interest rate rise from 0.5% from 0.25%. This caused the yen to push higher, but it also caused volatility in the US markets, causing the 10-year to push higher and in turn pushing interest rates higher. On top of that, we got the most recent PCE data showing that US household spending rose slightly in November. The PCE, or the Personal Consumption Expenditures Price Index, that's the Fed's preferred gauge of inflation, actually rose 5.5% in November from a year earlier, but down considerably from the 6.1% in October. But the issue was the core PCE, which excludes food and energy prices, climbed to 4.7% in November from a year earlier. And this was an issue because they were expecting the core PCE data to come in at 4.6%. And because of that, we saw the 10-year once again tick higher, causing additional volatility in the market. Now, understand this is a time of year when a little volatility in the market can cause big moves. And the reason for that is because there are less interest rate traders, less bond traders actually out there making trades. A lot of people have already taken off for the holidays, as the big money likes to leave and go spend time in the Hamptons. Well, that means there's less traders out there actually making trades. And so when data comes out and these traders start trading on that data, they can actually create bigger swings in those bond prices because as there's less people out there actually fighting on the other side of that trade. And because of that, you see prices bounce all over the place. And that's a lot of what you're seeing at the moment. Over the last week or so, you're actually seeing bigger swings in the 10-year and in interest rates with news actually hitting the wire. And this is something that's going to continue probably until the first week or so after the new year, as most of these traders are going to stay on vacation until that time. And that's also the time when we're going to get the latest data with regards to CPI, which is essentially what the market is really waiting on. And with that said, January is actually one of the months where the Fed doesn't actually meet. So there's not going to be any interest rate increases with regards to the Fed funds rate in January, as their first meeting isn't until February, where the market is already pricing in a 67% chance that the Fed is going to hike the Fed funds rate by another 0.25%. In fact, there's 34% expecting a 50-point basis hike at that time, which would get us even closer to the 5.1% that's already more or less baked into the market, in my opinion. But with that, you have some Fed chairmen like the president of New York, Williams, coming out and saying that rates could rise even more than the 5.1% that they've already projected. If that happens and the Fed continues to hike the Fed funds rate, that's going to put further strain not only on interest rates, but a further strain on the housing market. The most recent data showed that home sales tumbled nearly 7% in November, and that's the 10th straight month of declines, where we're sitting nearly 36% down year over year when it comes to home sales. So in 2022, we saw nearly a third less of the activity that we saw in 2021. And most of it was due to affordability. House prices increasing so quickly over such a short period of time, in addition to interest rates doubling within a couple of short months. Now, before we go any further, I'd like to ask a favor. If you find any value in the work that I put into these videos, do me a favor and hit that thumbs up. And feel free to subscribe to the channel to stay updated on everything real estate related. So the question is, what is the outlook for interest rates? What is the outlook for the housing market as we move into the spring of 2023? Well, I believe that you're actually going to see interest rates continue to bounce up and bounce down, kind of in this range, if you will, over the next couple of months. I don't see anything that could push interest rates a lot lower very quickly, but at the same time, I don't see a lot that's going to push interest rates a lot higher in the short term unless we see a surprise jump in the inflation data. And because I don't think that's likely to happen, I think interest rates are going to trade in the range that we've seen over the last couple of weeks, somewhere in the high 5, low 6% range upwards of maybe 6.5%, whereas I think the 10-year will also trade somewhere between that 3.4%, maybe as high as 3.8, 3.9%. And this is going to cause the housing market just to kind of chug along. We're in a time of year when things are slower due to seasonality, but it's also slower because of housing affordability. And because I don't see any big improvements coming with regards to interest rates or any big improvements with regards to housing prices dropping significantly to make housing more affordable, I believe that you're going to just continue to push along with regards to housing data. Even though consumer confidence improved in December and interest rates have improved significantly off their highs of over 7%, I think 2023 is going to be more or less a blah year with regards to real estate. I think you're likely to see home prices move down a little bit in most areas, maybe up in some areas, but it's going to be a year of slower activity. Less sales actually happening out there in the market. The data is going to continue to be negative with regards to year over year data because the start of 2022 was a hot market all the way through May. So when the numbers report for 2023, the numbers are going to show declines month over month. And because interest rates are only going to improve marginally, in my opinion, I don't think that's going to spark some crazy opportunity for buyers to just jump in the market. I think people that were on the fence, maybe thinking of selling, thinking of buying, lower interest rates will get them off the fence and get them in the market. But with that said, I don't think you're going to see the competition that you've seen over years past. And that's one reason you're seeing home builder sentiment decline for 12 straight months at a time when housing starts are declining. And this is going to put further strain on the housing market, not temporarily, because builders out there actually have a lot of property that's under construction that's going to hit the market in 2023. And this will be an opportunity for those buyers that actually want to purchase a home. If you're in an area that has a lot of new construction, this is your opportunity to potentially take advantage of the situation because these builders aren't in the business of holding on to homes. They're gonna want to sell them. And this is likely going to come in the form of seller credits, on credits to their design studio. In some cases, the builders are going to lower the prices. But as we've discussed in the past, builders don't really like to lower the prices because they need to keep the prices up in these communities. They're more likely to try to keep their price there, but in turn offer some sort of credit to help you buy down the rate and make the monthly payment a lot more attractive. Now, the reason I believe that housing starts slowing is a problem is because nationwide, we're still down 3, 4, 5 million homes, which ultimately kicks the can further down the road. So while builders slowing right now is a good thing for builders, it's actually a bad thing for the U.S. housing market long term, as the lack of inventory will continue to be a problem for the foreseeable future. Now, if you've watched my videos before, you've heard me say it's not always a great time to buy a house. If you're planning on buying a house in 2023, you need a longer term time horizon because we've seen homes appreciate so much so quickly. There's a really good chance that you see home prices move sideways, move down in some markets, which means if you have a shorter term time horizon, 2 to 3 years, you could be underwater on that property in a couple of years and in a position where you can't sell it. So if you are sitting on the sidelines, just understand the market. Buy when it's the right time in your life. Don't stretch yourself. Make sure you have money in the bank. But if you're renting, understand that rents aren't going anywhere. Yeah, rent increases have actually slowed and rents have cooled down, but rentals are remaining at the high prices. They're not dropping prices. They're just not increasing at the rate that they were. And again, this doesn't mean that you should run out and buy a house, but understand if you're paying $2,500 per month in rent, over a 10-year period, that's nearly $300,000.